Happy Friday. Brian Manning here with the weekly update. Let's get right to it. We got so much to talk about this week because this week made 0 sense on the surface, and I'm here to tell you why. We had strong jobs, weak jobs, rising oil, falling interest rates. So what's actually happening and what matters most? Let's dive in and let's figure it out. Number one, interest rates were whipsawed, but they ended up stable. Early in this week, we saw bond improvement, mortgage rates got better. Middle of the week, spike in oil prices, pressure on the interest rates. End of the week, volatility, but the bond market's holding its ground and interest rates improve. So good to see that. Bottom line, interest rates did not blow out this week despite all the chaos. Number two, jobs data is all over the place. ADP had 60,000 jobs. Another private company had 20,000 jobs, but the BLS said we had 178,000 jobs created in the month of March. The problem, most of the growth is in healthcare and education, which is not strong job growth for companies hiring. Even bigger issue is we had revisions in the prior month, and job growth showed an average of 20,000 jobs per month when we look at the revisions. So headline numbers still weak under the hood. Number three, unemployment signals are weakening. The first problem is most people are dropping out of the job market and they're not being counted because they've been unemployed for so long that they're not even being counted any longer into the unemployment rate. This does not show a strong economy, unfortunately, and that's what's happening in the job market. Number four, consumer spending. Spending data. Retail sales came back slightly stronger than expected, but this was before the spike of oil prices. Rising gas and rising food costs will give less discretionary spending ahead for consumers. Expect the pressure to be there on the consumer going forward. Rising cost. Number five, oil. The wild card. Oil jumped significantly this week, driven by the conflict in the Middle East and all of the uncertainty right now. No clear resolution yet, so the consumer has no idea what's going on with oil prices, and this gives us two impacts. Short term, inflationary pressure. Long term, a slowing U.S. economy. Number six, what is the market really saying about all this right now? Despite the strong jobs report, the bond market did not believe it because rates did not spike like they normally would off such a strong report. That tells us that the market is holding its ground right now. Labor market also does not just look as strong as possible, and consumer pressure is building, unfortunately, and the markets are starting to see that, and they are starting to price it in. Bottom line, volatility, it's not going away. The underlying strength is still there, but this is all right now, unfortunately, pointing towards an economic slowdown. I'm around all weekend. If you have any questions, let me know. I'm available 7 days a week from 8 to 8. Realtors, we have an amazing new luncheon right now. Just list, just sell, just win. We just did one yesterday in Boulder. We have another one coming up in Loveland. The following week after that will take place back in Denver. These are selling out. Secure your seat. We'd love to see you there. Happy Friday. Have a great day.